Hey traders, welcome to the Wednesday live stream. I'm Todd Gordon, founder of Trading Analysis. Our typical 3 minutes late. Thanks for joining us here, guys. Let's get the watch page up. Let's get the microphone, headphones going. So, hey, thanks for coming back last week. I know it's a lot to ask after the computers crashed 3 times. We've been busy. I think we found out the reason for everything that kind of blew up last week. So I think it was a faulty graphics card. So, you know, we have some things going on here. I'll tell you kind of how we settled that out. And those of you who are, you know, kind of tech geeks, guys who like the computer hardware, anytime I put stuff up on YouTube like that, it gets a pretty good response. So I'll kind of show you what we did. And if you have this problem at home, especially with trading computers, something I learned that I can share with you here for a couple minutes. Futures down nicely. There's Joe the intern right there. You guys just saw him on Instagram and Twitter. Good job, dude. It's tough to get millennials out of bed early, and he was here. Well, you're not even a millennial. How old are you, dude? So what generation are you in? Z. All right. Good work, though. Oh, hey, can you find me headphones that have, like over there, not this, but the regular traditional? All right, so let's take a look here. What's going on? What's going on? Tell you what. I'll show you what I did with the. I'll show you what I did with the hardware situation. Let's see. Desktop. No, that's not working. Uh-oh, Joe the intern's going to be in trouble here in a sec. How about number 1, 2, 3? There we go. All right. So here's what was going on with the situation last week. It was a faulty graphics card. I actually fried out this computer over here. Wouldn't start at all. So I have 4 monitors, all DisplayPort, and I had to get a new graphics card. So I called the good people at B&H. And here's what I got. I've got this is supposedly an NVIDIA HP Quadro P2000 graphics card. I think it's got 5 gigs of RAM. I guess what I didn't know is there's about a 3-year lifespan for graphics cards. And I didn't know that, especially traders. I mean, we're on our computers all the time, right? So it shortens that learning curve down. So, or should the learning curve, it shortens the expected life, I should say. Expected life. So I just fried it out. Just got 1 set from B&H, and we're going to try to put that in tonight. Do have a new computer here, and I'll show you if you guys are interested. The computer that I'm using here, new one. I use Falcon trading computers right here, and there's actually like a Todd Gordon bundle here. So if you want to use the machine that I'm using, this is the new computer that's running the webinar now, so we should have no more blow-ups. So that was interesting. So it's been busy getting everything back up and going. So kudos to Joe. Good job. How's it looking so far? Good. All right. Perfect. So we've got some, obviously a lot to go through here today. Let me get the questions up. How's everything looking? All right. So let's talk about the markets very quickly. We have a special guest, Brian Shannon, coming in. Good friend of mine who's good reputation in the business, quality trader. So we'll bring him in here in just a little bit. But let's start off as we normally do here. Kind of give you the outlook of the indexes from the top. So we are tracking several interpretations, guys. It's a tough market. There is about 2 or 3 different wave count interpretations that I'm tracking here in the S&P. I'll start off with something more, a little bit more constructive, which is going to be this. If you look at the low from August 5th, I believe we had possibly a truncated situation here. We moved up in 5 waves. We potentially did 3 down. And then we're going to open down about 1.5% this morning. So, is this possibly an ABC into a 618 retracement about to drop away? Possibly, but I don't have what looks to be a 5-wave move here. So far it looks incomplete. Okay. Now, this is a bear situation. This is our blue count on motive wave, which suggests a significant decline coming. Okay. The line in the sand here, guys, if this is going to work, is this highlighted zone right here is about 2,800. I'm going to be straightforward with you guys. Last week, we had a SPX put credit spread on. We had the 2825, 2800. I took the trade off. It wasn't working. Our premise for being the trade wasn't valid anymore, so we lost money on that trade. I did also book profits on the gold trade. I'll show you gold here in a second. So point being here is I am in the undecided camp on this count because it's incomplete, right? This could still be something of a B wave. And with this morning's gap down that's going to put us down around here somewhere, I'm wondering if, being that this is a 3-wave move from the August 12th low, if it's B of B, something like this. So I'm going to adjust this count live and just do it right here for you, okay? So let's consider this possibility right here. So near-term bearish, and obviously it's easy for me to say that with the S&P down, 1.5% in the pre-market. Here's another possibility. Maybe the world's not coming to an end. Maybe this is just a thin summer shakeout. Trump putting an agenda through with China when markets are quiet, trying to make a statement before the real, before they hit the road on the campaign trail. That's possible as well. And guys, it still could be a corrective pullback. And I'll show you here as we get off of this daily chart why this pullback this morning is very much expected. Before we jump into that short term, it's possible that we are at a corrective low and we're beginning to move higher. Now, why would you say, Todd, it's good that we have weakness this morning if you're showing us a potential move up to 31, 3,200? Here's the reason. Here's the reason. Oh, let's go over here. Sorry, let me bring over this red. And let's drop down to a 195. In fact, let's go smaller. Let's go down to a 60. If this is a wave 2 low that just double bottomed at the 618 retracement from the June lows, we just saw 5 waves up. Okay, we had a slight degree, like a half or 3/4 of an SPX overlap in 4v2. And I tell you, I don't mind that so much, because if this wave count is accurate, it's going to be a higher degree first wave. A first wave doesn't require such a separation between 4v2 as does a higher degree third wave. Okay, so if there is a little overlap on 4v2, fine, and it was very negligible. It was very small. Okay, the weakness that I'm saying that is welcome is being that we just had a 5-wave move off the lows. So maybe it's just ABC, right? Maybe it's just ABC down. And let me get all this fib out of the way. I'll clean this up later. But a typical wave 2 retracement would put you back down to 2880, right? So that's something that we have to seriously consider here in the SPX. Guys, there's more questions than answers in this market right now, and that's something that we have to be absolutely fine with. Just hitting my agenda here quickly. Let's look at bonds. Obviously, the big talk in the market here is bonds. I am still long TLT in my portfolio. I've been long for a long period of time. The 30-year bond, which I prefer to track, obviously more than the 6.5-hour TLT market, has a nice 5-wave move up. Beautiful push. I don't think we're at this 618 of the all-time highs yet, or excuse me, the 786. It's getting close. A 78% retracement. This is the retracement of no return. If you get through this, you're going to make new highs. On the 30-year bond future, that's 67 and 21/32. So we're at 64. Okay, so we're still a full 3 points away from that move. Okay, but that in mind, we certainly have a completed 5-wave move inside of 3. The fib projections are right at the 1.618. So we got to see what happens today. But this is significant resistance here in the bond market, and we'll be looking to do something of a butterfly in a potential 4th wave consolidation, because right now, the bond market is overcooked. I'm rushing like hell to get my refi in, trying to get a mortgage broker to follow through and get stuff done. I've got 3 in the line right now because they're all so busy. Good luck with that, but I'm trying to lock this right in today. So that's that. Obviously, you guys know bond market's up, yields down, and mortgage rates down. If you want to track the best correlation for mortgage, the 30-year mortgage rate is going to be the 10-year Treasury, okay, which is showing a very similar wave count here, which is about to set into a 4th wave. So I'm trying to lock that guy in. So that's bonds. Obviously, we've seen a massive drop in yields around the globe. We're seeing a catch down of U.S. yields to the rest of the world. There's a lot to talk about yield curve inversion. I've got some stuff I want to show you guys after we bring in Brian here about what yield curve inversion means. Maybe we'll bring Brian in on this if he wants to jump into that pool and talk about that. Also very much related to bonds and falling global yields, which is causing this shakeup, is gold. And the same situation is happening in the gold market that is happening in bonds, which is we do see a completed 5-wave move up. It's got the signature 4th wave. How high am I? Right here, just above me. The 4th wave kind of consolidation, sideways, triangle looking thing. That's textbook for a 4th wave. That gives you context. It shows you where you are in the trend, which means you have one more push up. We had the GLD call spread. I took final profits with our members yesterday. So the takeaway here, guys, is you've got bonds and gold into resistance. One thing that I would caution you on is this, which is copper. Copper is in a massive consolidation here, okay? Potentially a big triangle in copper. We have a very dangerous 2.55 support zone here. If that breaks, that's going to have a lot of deflationary implications to emerging markets in China. We're going to bring Alex in as well. We have a lot to do in the show, talk about the macroeconomic flows. There's a lot happening in the FX markets that is signaling risk off in the equity markets here in the West. So we got to watch that. If it breaks 255 in copper, that's a problem, guys. That's a problem. From an Elliott Wave point of view, if you break and continue to go and you get through 2, that's a major problem. And stocks are going to be much lower than they are right now. Let me just finish with this. Crude. I think a lot of people are making a big deal about crude. I'm just not seeing it. And I've been saying this to my members for a couple days, couple weeks now. It's not going anywhere. Like everyone's like, oh, crude's breaking down and blah, blah, blah. It already broke down in 2014 to 16. Yes, we've had a sell-off, but I am actually foretelling crude is actually one of the more bullish signals out there for me right now, because and when you filter through the technical lens, there's actually nothing wrong with crude oil here. In fact, if the stock market begins to find support, I'd actually be a buyer of crude here. Yes, I understand you look at the XLE, the ETF, and that thing is looking pretty weak, but I don't see it right now. I don't see it right now. So that's it for now on the open of the show. How are we doing so far? Computer hasn't crashed. What do you guys think? Doing all right so far? Give us a thumbs up in YouTube because we have not crashed. I love it. This new Falcon, you guys should see this computer. This thing's it's like a little nuclear bomb in here. It's glowing blue below the desk, and actually I think it's burning the hair off my legs down here. So hey, let's bring our good friend Brian Shannon on here. I'm gonna unmute him, bring him in. Mr. Shannon.
Todd, how are you?
Welcome to the Wednesday live stream. Brian Shannon coming to you from Colorado. right? You're back from Montana.
Yep, in Denver.
Dude, how are you, man? I miss you.
Yeah, it's been a while.
I know. Last time we were together, we were in Colorado actually for the Chart Summit, for JC's Chart Summit. And I'll tell you what, I've been skiing my whole life. Like, Brian is hardcore. Him and I were beating each other up out there in the slopes. He is a good skier, man.
It was a good time.
That was a lot of fun.
Where's the footage of that, Todd?
Oh my God! Hey, Joe, the intern. Where's all the footage from? I'm just yell at him for everything, dude. I'm about a year and a half behind on footage. I'm terrible. So guys, Brian Shannon, you know him. He is the founder of AlphaTrends.net. Wonderful site, huge Twitter following. You're at AlphaTrends on Twitter, right?
Yep.
Okay, perfect. Author of technical analysis using multiple time frames. Oh, headphones. Oh, thanks, Joe. Sorry if you're getting reverb. Are you getting reverb right now, Echo, Brian?
I'm not, no.
Oh, you're not?
Sounds good.
Oh, perfect, okay. If that pops up, let me know. I'll throw headphones in. Thank you. What, is it okay? Put them in, okay. Joe's saying put them in, got it. I feel like Jackson, Maine from A Star Is Born. They're like, Jackson, put your headphones in, you're losing your hearing. Can you still hear me?
Yeah, you're good.
Okay, perfect. Yeah, I get a little echo with guests. So VWAP expert, we're going to talk about that, and ex-broker at Lehman, starting in 1991 in Boston. Wow.
Right out of college.
Right out of college. Now, talk to me about that. It was just just cold calling, pounding the phones, everything that we've seen.
Little did I know. I thought I would be wheeling and dealing, Todd, and I was a glorified telemarketer. Pounding phones, like you said.
Oh my God. You either went to be a broker or you went to be a market maker in the NASDAQ. That's pretty much, if you're working back in the 90s, that's how you entered into this business.
I probably should have done the market maker route.
No, you shouldn't.
I knew I had a choice.
No, because I've traded with, and I'm sure you have as well, I've traded in prop shops with so many ex-market makers, like they refuse to trade with the trend. They sell every top and buy every bottom. So I think the humbling that we took as a broker served you better. So anyways, talk to me a little bit about, I mean, first of all, let's make sure, are you screen sharing? Jump up on, go to webinar, and I'm going to make you the presenter. You should be able to share. There we go. Perfect. So
I did get it. I don't see it yet, but is it working?
Yep, I can see it. Yep. So I'll bring that in just a sec on your screen. But
okay, good.
Talk to me a little bit about, when you sit down in the morning, like how do you approach the markets? And I'm obviously leading you into VWAP. I want to know, what exactly it is and how it helps you make decisions through the trading day.
Okay, well, what I typically look at, I start the evening before, of course, kind of wrap up where the markets have been. I do a short video about the markets and key levels, and then in the morning I'm prepared. I'm not taken by surprise. I already know my levels. They're drawn in on the chart. I have, VWAPs from certain events, such as the most recent low, which we're testing here this morning.
Yep.
Interestingly enough, and I've got a list of stocks that are kind of my go-to stocks, and right now I think I tweeted about this the other day that the stocks just we're up huge yesterday. We're down on a big gap this morning. It makes it a difficult environment, really, as you know, for trading these stocks and holding them. So you've got to really scale back the size, widen up the stops a little bit, and things I don't really like to do. But you gotta deal with the market you're given, not the one you want.
That's so true. That's so true. And I think I saw an interesting tweet that you sent out maybe yesterday or today. You prefer to trade individual stocks, but in a market that seems to be very lost and confused, individual stock trading is not the way to go here. So I think you said you would rather step back rather than go to index trading and kind of stay true to your discipline. Is that right?
Yeah, for the index stuff, I'll day trade that. I don't
Yep.
consider myself a day trader, but when you have this massive volatility,
Yep.
that's a good way to, just scalp a little bit here and there. But I prefer to swing trade stocks.
Yep.
And right now, the setups just aren't, nice, clean setups. We've gotten lucky, I think, on a few of them, but I just don't have a lot of confidence in the individual setups. And you know how it is with selling short individual stocks. They look like garbage, then they gap up and shake you out, and then the next day or 2 days later, they completely cave in. So I find especially on the short side, individual stocks are difficult. I still
Yep.
try it.
Yeah, right. No, I hear you there. And you and I were talking in kind of the pre-show interview, and your chart is up now. Can you see the return? Can you see the chart, or are you just looking at the chart in
Yeah,
front of you?
I do see it. Yeah.
Okay, perfect.
So this is,
Yeah.
go ahead.
No, please go ahead, jump in.
Yeah, so this is just a 15-minute chart. Each one of these candles is 15 minutes.
Yep.
And it goes to the low of this month. And what I have on there is a bunch of stuff, but this green line is the volume weighted average price from this low. And here we are this morning testing it. If I go over to the daily time frame, what I think is still pretty likely is that we're going to come down to the conjunction of this black 200-day moving average and the blue, that's the volume weighted average price off the low from December. So that was touched precisely at the June low. And now it's kind of a coincidence that it comes together with that 200-day moving average. But I think that's going to need to be tested before we can see this period of volatility at least kind of calm down a little bit.
And from my work as well, that 2800 level is so huge. There's such a confluence. The 200 days you mentioned, the VWAP, a lot of Elliott and Fib downside, a lot of decisions will be made there. And something that comes to mind there is like the market. I'm pretty sure the market's going to go there, but I think Linda Bradford Rashke said this, that the market goes to the most obvious point in the least obvious way. And I think it's trying to shake as many people out right now as possible before it goes down there. And it's certainly acting like that, isn't it?
It sure is. I love that phrase too, that she's great.
Oh, 100%. I guess she's got a new book out too, which is supposedly a pretty fun and entertaining read. We got to check that out.
It's called Trading Sardines.
Trading Star. That's it.
It's a good book. Yeah.
Did you get into it yet?
I did. It's a fun read.
Okay, perfect.
First half is kind of real fun, and then more into the market type stuff.
Okay, I gotta check that out. And the other one, we had John Nigerian on. That's hard to say. 2 weeks ago, and he was saying he had to get after Ben Mesrick's new book, Bitcoin Billionaires, with Cameron and Tyler Winklevoss. Have you gotten into that one yet?
I listened to that one. Yeah, I had a long road trip, so I listened to that one. That's a good one too.
Oh man, that's awesome. My summer reading list is building up, and the summer's over in 2 weeks. So, all right, perfect. So talk to me. Shift gears here a little bit. How do you incorporate IBD stuff and stock picking into your repertoire?
Good question. I mean, so IBD. I think everyone who considers themselves a trader looks at their stuff or is involved. Gets the paper, whatever. I mean, they're the people we learn this stuff from, the 50-day moving average, the 200-day moving average. So I incorporate it by looking at some of their lists. They have really good list of high performing stocks close to a pivot, close to breaking out, relative strength leaders. So to me, it's a place for building a good shopping list of stocks. And then, when it comes to trading in a more uncertain environment where everything isn't just going up because of the market, right now, when you have all the fundamental information right there at your fingertips, it gives you a little bit more confidence in the ability to have more confidence in the stocks you're trading, because you can see that their sales and their earnings are growing, and that these are estimates going up and that sort of thing.
So interesting. So when you're trading, the majority of your trading, I asked John this same kind of question. How do you break up the capital that you trade? And by the way, this is obvious at this point. Today's information age. I only bring people on when we're talking trading, people who actually trade. There's no more of this. I show my live account all the time. How do you break up your portfolio? Do you have, do you do any, you said you short-term trade the indexes when there's volatility. I'm assuming that's in futures. Maybe that's in the SPY. Do you do options? And then how do you break up your longer-term stock portfolio in terms of selections? Do you break it down based on sectors or weight in the market? Like, what does your portfolio look like?
I think it's a lot different than most people. So I do trade the E-minis, the
Yep.
ES, generally speaking, sometimes the NQ, but I prefer the SPY. It's just, what I've done most. Most of my individual stock trades are swing trades. Now, I'll try to hold them for several months at a time if I have the ability, if the market gives me the ability to do that.
Yep.
But I often have a high portion of cash. So I will typically try to swing trade, fairly actively with about 20% of my market capital. I think that that's the appropriate amount of risk. For futures, it's about 10%. And then the other 70%, I try to allocate towards maybe holding some SPY or some, some QLD or some, double Qs for a longer period of time. But it's a lot more. I don't have like a core Disney position or AT&T or something like that. I don't have any. I can't remember the last time I paid long-term capital gains.
Okay. Okay, got it. So you're okay, understood. So you're trying to hold index positions for the long run, and you're moving around month to month and short term, less than a year in your stock selections.
Yeah, I mean, generally, Todd, less than 3 months. I mean, an earnings cycle is generally what I'll go through. But if I have a position in a stock that I'm up, pretty good on, and then they're due to report earnings, I'll hold a piece of it.
Yep.
I might try to hedge with options, but that's never been very helpful to me. So I do, I do take a look at, when we get more uncertain. The volatility is up, so the options cost more, but it's still sometimes the lower risk way to just buy straight calls or straight puts, because you don't have those huge gaps against you that can really do damage.
Yep, understood. Hey, let's shift back to the market. What are you looking at here? We talked about SPY and viewers. Bless you, Joe, the intern. What any particular setups or stocks that we're swing trading in here that you're into that we could bring to our viewers' attention?
Yeah, I like Callaway. They reported some earnings a couple days ago. If you look at the weekly chart here, Callaway's got this nice, it got smashed late last year, nice longer term base, and it's breaking beyond this resistance. So there's our weekly chart. We go down to the daily time frame. This was the event. So it's not quite ready yet. So what I then do is look at a 15-minute time frame.
Mm-hmm.
And what I have here, Todd, is I simply put a volume weighted average price right here, because that's the event, the short-term event on this 15-minute time frame. So I'm looking to buy this one, maybe today if it can get above yesterday's high. And I think that a stop can go right here. I mean, that's a pretty low risk setup. So I'm looking to buy it above 1872 with a stop just under here at 1798. That's, a starting trade, and we'll see if it can follow through. But again, the market down like it is, I don't have a lot of confidence in it.
Yeah. So talk to me about that with volume weighted average price following a news event or following earnings. Obviously, a bunch of volume went through, but the volume went through at a bunch of different prices. So, right, or traditionally on an earnings event, does a bunch of volume hit at the opening price or when it starts trading the next morning, and then it moves around there? Like, what impact does earnings or an event like that have on VWAP, if any? It could be a dumb question.
No, I don't think it's a dumb question at all. It's a great question. What I really like about the volume weighted average price is it tells us where is the average participant position from since that event. So we have a big volatility event with large volume. That's the catalyst. So after that catalyst, we let it settle a little bit, and then who's gaining control? So if I kind of just take this volume weighted average price and, fatten it up a little bit so it's easier to see on the screen,
Yep.
you can see that, we're right there. So it's basically so far pretty much an even battle. But I think if we can get back above here, yesterday's high, it tells us the buyers are in. It's their game to lose, right? Because the daily chart is showing signs that it has the potential to, add to this breakout. So it's a low risk place. So we identify the candidate on the daily time frame, and then we switch to the shorter term time frame and start to anticipate.
Okay.
And then now I'm anticipating what's going on. Where do the buyers gain control? What's the overall market condition? If I get involved above this level, well, then what's my risk? I like to look at placing my stop underneath the higher low, the most recent relevant higher low above a rising 5-day moving average. So this is the 5-day moving average right in here. I'm drawing it, those arrows on.
Guys, and notice Brian has not yet said anything about risk yet. He said something about upside reward, I should say. I'd be a terrible interviewer. He has not said anything about reward. He's talked about risk twice. He opened with saying, here's where my stop, here's my entry is, here's where my stop. I was waiting for him to talk about upside reward. Didn't say anything about it. Circled back to risk again, reasserting his conviction of where the stop's going to be. I mean, talk about being secure in your setup, secure in your risk. And then what about the upside, Brian? Do you set targets, or do you kind of let the trade take care of itself?
What I'll typically do, Todd, is, let's say today we get a quick run up to 19.5 or something.
Yep.
And that might be daily R2. I'll typically take a third of that one off right there. And then hopefully I can move my stop, close to break even on the balance and take all the risk out.
Got it.
And then as far as targets, I'll look at the daily time frame and I'll say, it looks like it has the potential to maybe go fill this gap. So we'll keep an eye on that. Or perhaps up to this prior band of support, that looks like it's likely to become an area of supply. But it doesn't mean I'll necessarily sell it. Maybe I'll sell another third up into that area if it gets there quickly, if it starts getting extended. But what I would prefer to do is go back to the shorter term time frame and take a look at if the action continues like this. Well, then what I'll do is I will raise my stop up underneath these higher lows, and then I might get stopped out on the balance right here. Perfect.
I love it. Talk about laying out a trade plan and basically seeing 3, 4, 5 steps ahead of time. It's like a chess match. His entry was secure. He obviously knows the parameters in which he'd entered a trade. Then he set out the stop loss, and then he starts putting out the first or second take profits. I mean, that's a trade plan. It doesn't matter if it's a 15-minute chart trading ELY or if it's a 3-month SPX position. I mean, it doesn't matter the time frame. A chart's a chart. The process is what needs to be consistent. Brian, I don't like to trade. I mean, golf season's over, so I don't think it's going to work. No, it's so terrible. Such a bad joke. What else are you looking at, brother? What else can we throw to the viewers? Because they always yell at me. I like talking about the philosophical side. I like getting to know the person. But everyone yells at me in the chat. They're like, more charts, Todd, more charts. I'm like, okay, fine.
Well, I know you like Twitter, so we can talk about that. I mean, Twitter's got a, and here's the thing, Todd. I can take this VWAP tool and just, drop a VWAP from the IPO. And, you can see how we started finally showing support above there. And so if you take, the point here is that if I take a volume weighted average price off of all of these significant highs and lows, you can see the buyers are back in control. So, one thing to keep an eye on here, you could look at this as an inverted head and shoulders pattern, I guess, but, shoulder, big head. Shoulder.
Is that almost a little bit of it? It's almost a little bit of a kind of a, is that like a, can you have a cup and handle IBD style from a low like that?
Yeah, I think you can. But I think the price target becomes ridiculous, though, because you're down here at 15 up to 45, so that's telling you, 30 points. It's possible, but not likely, not at least for my time frame. So I go back to the daily time frame, And here we're holding above this prior resistance from the last quarter's report.
Yep.
We're holding above a rising 20-day moving average. We got going in there yesterday. So now I'd look down to a shorter term time frame, looking at a 15-minute again. And let's just move this. So we're having a little trouble this morning. So, now we've got the volume weighted average price again, this time off of the event. The event here, of course, is the earnings. So let's just do this again and fatten that up so we can see it. Since the earnings report, it's been a critical level. And now I think really to get the momentum, you probably need to see it above this peak right here at about $42.35.
Yep.
So but it's just so choppy in here. So far, it hasn't given a good, clean entry. I think, though, if you're in it, your worst case stop at this point probably goes below the low of this month.
I like it. I like that. That's something I definitely looking at Twitter. I like the relative strength in this market. The SOCL, social media stocks have come back. There's a lot of good second tier names that are moving in here. I like it. All right, perfect. Let's leave it there. That was great. That's Brian Shannon. He's from Alpha Trends. Great guy, great skier. I think JC's talking about another event, possibly in wine country. Did I just let that out of the bag too soon? I don't care. Hopefully,
I think he's been tweeting about that a little bit. I think that's coming up in a couple months, maybe. Yeah.
Beautiful. And then it will happen here next summer in Saratoga. We got to get you guys out. We have a cool space downtown. You committed early on, so you're locked in, brother. I hope to get you out here and show you a good time on the East Coast. This is horse country in upstate New York.
Fantastic.
And this is actually, he was laughing. This is Saratoga above me right here. Joe, the intern, flew the drone out there and got some footage. Joe, we had to lighten that up a little bit, though, man. A little dark, but anyways. So hey, I'll see you before then. Hopefully we get to ski this year in Colorado. Great stuff. He's at alphatrends.net and just a tremendous guy. So Brian, thanks so much for coming on the show.
Thanks for having me on, Todd. Talk to you soon.
All right, buddy. Sounds good. Have a good rest of the day.
You too.
Okay.
Bye.
All right, guys. So that's Brian Shannon. What a great guy. Just a super nice guy. One of the fine guys in the business. Great trader. Simplified approach. Good stuff. All right, let's bring Alex in here. I want to talk about the macro picture here quickly. Got to make a quick switch here. Alex, push your camera up a little bit before I bring you in. There we go. And you're dark as always. So you need some light there in the office, buddy.
Oh, wait. Should I light on?
Always. Every time.
Oh,
that's
just
all right.
a second. Yeah.
Go ahead. So as I mentioned at the top of the show, there's been some pretty good moves in the FX market. We're seeing a big push towards risk
I guess
off.
This is okay.
Yeah, you look good.
Okay.
I just threw you the screen on to share for charts. Do you want to kind of show us what's going on in FX? And again, guys, I can't understate how important the FX market is at times. My career kind of started when I was trading for a hedge fund during the credit crisis. I started to gain a pretty good popularity by basically trading the yen carry unwind. Other screen, Alex?
Yeah, I'm just gonna. Now it should be okay.
Okay, there you go. So in 2008, the big thing was the yen carry unwind because we had an era of very low interest rates that was causing people to sell their local currency, and they were the other way. They were selling yen in a risk-on environment that was very cheap because interest rates in Japan were so cheap. They were selling yen, taking that and then purchasing in foreign currency in other countries at a higher yielding currency. So that was called the carry trade, funding in Japan and investing overseas. Well, when the credit crisis hit, the market sold off in this this massive trade, this short position in yen began to unwind. The yen began to get bought as people were unwinding that leverage trade designed to get a return, and that created a very tight correlation to S&P futures, and also yields were dropping, right? So U.S. yields were dropping as bonds were being bid, the yen was being bought, and the S&P futures were selling off. Alex is showing you up top here, dollar yen. Can you scroll back, Alex? How far do your charts go back? Can you show me the 2008 and 9? Okay, so see that massive drop in dollar yen? That's selling of the dollar, buying of the yen, and the yen was being bought against all currencies: Euro yen, Aussie yen, Kiwi yen, Norway yen, and that was a major kind of hedge fund, wealth manager move towards unwinding the carry trade. So basically, if dollar yen's going down, that's pretty much bad for global equities and good for bonds, bad for yields. Alex, show me what you're looking at here. Oh man, the market's already open. Show me what you're looking at here.
Yeah, we have been tracking this for some time. I'm looking here for a move down in dollar yen. So we have a nice 5 waves up in A. Then we have a subdivision here down in a wave A, triangle in B, and I'm expecting move down in dollar yen in C. So I'm gonna wait a little bit that the bonds consolidate and gold have a pullback, and then I'm gonna enter short on dollar yen for this target around 95. So I think we are going down basically 8 to 10% in dollar yen very soon.
Okay, so I mean that's going to be a risk-off kind of situation. Show me Aussie yen. This is a big one.
Yeah, Aussie yen is testing almost pretty significant lows here. As you can see, it's almost 10-year lows, even more. So we are not still breaking down, but with the dollar yen outlook and falling yields all around the world, Australian yields are also massively going down. So I think we're going to have some consolidation, maybe a pullback and a test, and then continuation to the downside.
Yeah.
I also have some wave counts here, which I think it's foretelling that most probably we're going to have a corrective pullback and then continuation to the downside to these 60 levels.
Interesting.
So I'm counting this as a wave A up in B, and we are already starting move down in W here.
I think that's mature. I think that's responsible, not to be not condescending or whatever. I was actually a little hyper to say, go back to that weekly. That was such a major, like, I don't know, it's a 5-year shelf in Aussie yen. No, what am I talking about? It goes back to 2006.
Yeah.
This is a 14-year shelf in Aussie yen. And I can't overstate this enough. Selling of Aussie is a bearish bet on commodity supply to China and demand from China. Buying of yen is global deflationary. Wealth managers moving into the yen for safety. Selling of Aussie, buying of yen, that is not good for global stocks, and it is bearish on yields, bullish on bonds. But Alex was saying, look, we might have a 3 or 4 figure move up in Aussie yen before we finally break. To his point, like, don't be so say this 14-year shelf is going to break. So you guys might be rolling your eyes a little bit and you say, what's FX have to do with it? When FX gets moving, it drives all the other major 3 asset classes. So don't turn your back on FX, especially because volatility has been at like a 30-year low, 40-year low in euro dollar.
Yeah, I'm going to look here. I'm looking this. I mean, the situation is a little bit of a mix now because we have a kind of a Fed in play, and I'm looking for some place which are going unseen. For example, I'm waiting this GBP US dollar here to finally make some type of a low. Actually, if you look here, I have one interesting data for you. I will show you that just in a sec.
Okay.
You can see here that just to find this, give me just a second. Yeah, it's here. So I will show you net speculative shorts in Great Britain pound is almost at the lowest level in the recent history. So as you can see here, I don't know if you see this chart, but
yeah, we saw it. We saw it. We got it. Yep.
Yeah. So I'm looking for a small push, and actually, from the interest rate perspective, Britain is at 0.75, and inflation it's at 2.1. So I think this will go a little bit unnoticed, but I think that GBP, it's gonna, in this race to the zero, it's gonna unnoticeably make this ABC push up, while the yields also dropping in other countries. Also, Canada is holding 1.75 interest rate, so they didn't cut it at all.
Okay.
So I'm looking for a few trades in this EuroCAD and some other CAD-based pair, because I think that Central Bank of Canada will start dropping rates very rapidly from September.
Very good.
So
very good.
This
Obviously,
is kind of
that's another commodity play in terms of this kind of global deflationary push.
Yeah, this is kind of two themes which are kind of unnoticeable now on the market, which I spotted, and I'm trying to find the entries on these two.
Very nice. Hey, quickly, give us do you have a Bitcoin update you can give us?
Sure, always. Bitcoin is actually working as we track it for a few weeks. We are still in this X wave, so this trend line holds well. As you know, the X wave has a kind of a property to put people on the wrong side and convince them that the trend is going to continue upside, and then it's reverse. It's a very tricky connector for the double zigzag, and I think now we are developing here another zigzag in an ABC. So we are looking for a more downside until the mid or to the end of the September, where we expect to take some longer term positions in cryptos, because these charts are looking very nice for the 2020 and 21 in cryptos in our eyes.
Very good. Good stuff, Alex. Thanks for that update. Very good stuff. Alex runs our crypto and a foreign exchange service at Trading Analysis, so definitely check him out. Let's see. Alex, I will see you in the member webinar in about 25 minutes, okay?
Sure, no problem.
Thanks, Alex.
No.
Okay, guys, so just a couple things here, quick. I know markets are open. We're down pretty well here. Let me just give you a quick update as we are 5 minutes into the open. Just trying to keep the show on schedule. You know, guys, I think we're trying to fit too much in a short show. I feel multiple shows coming out here. So let me know what you'd like to see more of, obviously, but let me just bring the charts in here quickly and show you what's happening here on the open. Guest call. Okay. There we go. Perfect. Just turn that audio off. Okay, good. Okay. So we're heading back down to the wave 4 low here on the open, right? So I'm not afraid of this. This is not yet something where I would say we're extremely bearish. You still can count 5 waves off with very minor overlap here. So, you know, we're going to watch. If we start to break down through the 786 retracement, that is the retracement of kind of no return. If you break through 2847, then I do think the bearish trend continues. One fun stock, actually there's two setups I want to show you here first. Disney's the first one. I'm going to be looking to do this with members. We do have Disney following a super nice gap through the 4-year resistance here into the 130. We just set up an ending diagonal here. We're starting to decline. I don't think this is the beginning of the end for Disney. I think it's actually going to be a good opportunity to begin for option traders to take something sideways in here, like an iron condor, like a butterfly. I'm starting to see, you know, this could be the early goings of a wave 4 correction. Don't know if it's going to be a triangle, could be a complex, but it really should exist in this zone right here, which is anywhere from 145 down to about 125. So with our members, we're going to be looking to do one of those wave 4 plays, sort of in this zone in here, see if we can collect some decay. Disney is broken out. Provided that the market doesn't absolutely fall apart, I think there's a good opportunity there in Disney, something around the 135 strike, maybe selling 2 135s, buying a 145, buying a 125, and structure either a call or put butterfly. That's one trade we're going to do. And then if you do want some short exposure, this one's been interesting. This is Zillow. It's a bearish chart. It's got a nice 5-wave decline from June of 2018. It's done a complex ABC X, ABC up, and we're starting to get a pretty significant breakdown. Steve Eisman has been pretty vocal. He's the guy from Big Short who shorted the housing market. He's short on a very fundamentally driven case. From a technical point of view, it looks good. This is something I'll certainly be looking at. And if this is any indication of what's to come, minimum would be $20 from an Elliott Wave point of view. So we're breaking uptrend support here. It's not something I would chase yet. I would wait for some kind of wave 4 bounce, hopefully for a final push down. So watch Zillow. Okay. Any other questions, guys? Any other questions, comments? Be sure to throw a thumbs up in the window. Throw a comment, question in there. Oops, let's get Alex out of there. Guest call, there we go. Throw a question, comment down there. We'll feature you on next week's show, guys. I hope you have a great trading day. I think the most important thing, the most important takeaway is it is August. There's a lot happening in the news cycle, but it's August. A lot of traders are away, even with the volatility. But if you really look at it, okay, there's volatility, but we are mostly range bound here, so don't read too much into it. Brian was saying, scale back a little bit, trade a little smaller, perhaps wider stops. I totally agree with that. It may seem like there's a lot happening in this market, but it's quiet, right? There's not a lot of rhyme or reason behind the movements, and again, that spells a kind of a thinner, slightly less participated in market. So just be careful out there for now, guys. So guys, we're at tradinganalysis.com. Be sure to go over, check out the website. We obviously trade live all the time. We carry a stock portfolio. We carry an options portfolio. We have foreign exchange, and we have crypto. Let's see what else. No CNBC this week. I will be on CNBC next week, and that's going to be it. All right, guys. My Twitter handle. What's my Twitter handle? Wow. You can find me at. Let's do this. It's called. Why is Alex? There we go. You keep popping back on there. I don't know why. Here's my Twitter handle. It is Todd Gordon Trade. Twitter.com/Todd Gordon Trade. And that will bring you to me right there. Okay, so be sure to follow me on Twitter. Throw again a question, comment in the YouTube window below. Throw a thumbs up down there if you like. If you appreciate the effort, that lets YouTube know that we're doing something right for you. And let me know what you guys like to see on future shows, okay? We're going to leave it there. Have a good one, guys. Good luck trading. And we'll see you next week. Next week's guest will be Amelia Bordeaux. She's my good friend from CNBC. She's got a wonderful macro take, all-around fun girl, and very intelligent, good look in the markets. So we will see you back next week if we don't see you at Trading Analysis first. See you guys. Have a good day.